Okay, we're going to take a look at the dollar Swiss. This is Bruce from FXEmpire, and this is a review of Monday's action and what it might be telling us for the future. First, we're going to take a look at the daily chart, and we can see from the daily chart, if you haven't already been following this, is that we broke out from a head and shoulders bottom or an inverse head and shoulders last week, or at least we continued the breakout. The breakout actually started a little bit earlier, but there was no follow through, there was no conviction, so it wasn't clear that the breakout was actually happening. It did happen, and we found resistance at the 50% level last week and also today. So it looks like we're going to pull back to test the neckline of the breakout. And in that pullback, we can look for possible entries. So I'm going to go into the 4-hour chart because that's going to give us a little tardier view of what's going on. The head and shoulders is valid until we break below this right shoulder. And of course, for a stop following an entry on a pullback, that's way too far. So instead, in this 4-hour chart, we can see the low here is higher swing low of 97.58, and that can be used as a stop. So we'll be watching the price reaction to the various Fibonacci levels to look for some type of intraday reversal that could give us a signal that it might be worth taking a position in this pair, due to the fact that the targets are a bit higher. So on the daily chart, we can see the 62% level is one target. However, that's not, we haven't yet reached the target from the head and shoulders bottom. That target is up here around 99.30, right around the 78.6% retracement of this full downtrend trend. So given that there's additional upside following the breakout of the pattern, that's why we'll be looking for some lower prices to get in for a continuation of this breakout that started last week.